Hey yo guys, what's popping? Welcome to the 9th episode of the weekly market outlook with TRADEXPROP. Now, if you have any other questions, concerns, inquiries about the products and services that we provide, don't hesitate to reach out to us, to either me or any of the TRADEXPROP members, and we will gladly be able to assist you on your inquiries. Now, I won't drag on for too long. I'm kind of in a rush today, so let's get straight into the outlook. So here we have the DXY on the monthly chart, right? Actually, let me just hide my I don't like to record with my crosshair, so that's let me just a bit cleaner, as you can see. So here we have the DXY monthly, right? So once again, recap: swing high, swing low, still within this overall range, and we have this smaller internal range within this larger leg right here. So monthly swing high, monthly swing low. So for the past 2 months, we've been kind of playing within this inversion fair value gap, right? We have a push above it, causing this to be an inversion, and the bias is still pretty much the same since I guess the first weekly outlook, which was for price to close above it, come back down, retest to go higher into maybe this monthly swing high right here. And as of now, just a bit on that, we have kind of taken out previous month's low right here, and we are seeing a good reaction in this current monthly candle of June. So as of now, I'm still bullish on the dollar. I don't think there's anything to expect otherwise. Like we could likely come up here into this monthly swing high right here. So that's pretty much it for the monthly. There's not much information that we can extract out of this time frame as of now. So let's drop down into the weekly time frame. So here we have the DXY weekly. Repeat the same steps as the monthly. We have swing low, swing high. That forms our current dealing range right here. This is that swing low because this is that large obvious pullback before this impulse that took out structure with big closure above, right? This is why I can take this low as my current dealing range, because it didn't really offer much of a pullback. So last week I expected us to kind of consolidate in a sense. I mean, not consolidate, but as I was still bullish on dollar on the monthly, I was kind of mixed in my bias because the weekly showed this and we had a large rejection. So my weekly was kind of not in line with the monthly because we took this out and it was kind of a seek and destroy week, which means that price action was kind of indecisive on where it wants to head. So I was like, okay, well, this is what we had coming into NFP week, which was the previous week. So it wasn't really a great week for the DXY in my opinion. It wasn't really clear, but now we kind of have a good stage set up, right? So bullish on the monthly. Like ideally, I want my weekly to follow suit as well. And what do we see? Well, NFP week, we had this large taking off previous month's low into this weekly fair value gap to then transfers higher in this candlestick right here. So ideally I wanted this to go, but we did take out a pretty important liquidity pool right here. So this big move up was pretty much valid and we have a really good reaction right now. As of now, I'd say on the weekly, your targets could probably be this high or this high or this cluster of highs right here. See how all of this let me draw that out. See how all of these highs are kind of lined up right here. This could be your buy side targets easy. This one could be your first one, and you could look to target all the way up into these highs into this weekly bearish RDRB right here. So we now know that we are bullish on the monthly and we are also bullish on the weekly. Where can we find support at on this time frame? Well, this long wick really at the moment is the only place where I could expect support on the weekly from if we were to follow suit from this reaction to head higher. Now it could of course come all the way down into this fair value gap, go higher, but looking at where it's at, it has to travel down 1,000 points to do that. And normally when you see this, you're not expecting price to come all the way down. Instead, you would want it to kind of have a slight pullback at the start of the week and then go higher. Maybe something within this week right here. You can see price travel, pullback, open, low, high, close into these levels right here. So that is what I'm seeing on the weekly. Let's see if we can refine this level, this level right here on the daily. Oh, that's a very ugly line. Let me just remove that. Let me just remove that as well. So here we have the DXY daily, right? First thing first you have to do is kind of mark out your dealing range. So swing low, swing high, big impulse down, impulse up, right? So this is that dealing range that we're in, and this is the equilibrium. So currently we're here and we are bullish on the monthly and the weekly time frame, which means we should be expecting the same on the daily. The daily most times is a refinement on the weekly time frame, right? Because on the weekly we wanted, I kind of all tapped out, but on the weekly we wanted a move down into support within this large wick. There's something inside, so we go down to the daily to see if there's any refinements, and there's nothing really much here. I guess you could say there is a small inversion, fair value gap, but I don't like to count that. So there really isn't anything much, to be honest with you. We have this order block, we have this negation block, and we have nothing really much within this big range right here. So I will want to see kind of like price play out during Monday to see if it come back, form a fair value gap, trade into it on Tuesday, Wednesday to then push higher. So Monday, likely I want to stay out of the market, so let it play out, see if we form a fair value gap or how deep we come into this liquidity void right here. So let's look at the econ calendar. Let me see if I can pull that up. Oh, it's not being pulled up for some reason. Let me see if I can get it on my other screen. 1 second. I want to apologize for this. This is not good. Oh, what did I do? Let me try and find it. Does this work? Copy. Okay, here we go. Couldn't find the screenshot. But here we have the econ calendar for next week. So I want to stay out on Monday because I want to see price play out. So that's, oh my god, this outlook's a mess. Jesus Christ. Anyway, so my apologies. So Monday no news, Tuesday no news, Wednesday we have CPI, which is pretty big, and Thursday we have good old FOMC, and Friday we have consumer sentiment. So I would likely want to play Wednesday and Thursday, seeing as Monday and Tuesday has no news. Monday is likely to be a small range day, and Tuesday could offer that, oh my god, could offer that manipulation to go lower. And if Tuesday doesn't offer that, then likely we might see Wednesday do that, and we could expand higher following these high impact news, right? So as of now, still no clear areas of interest. You know, you want to kind of keep track of where this is on the daily. Going down, it's quite close to this order block, and it's right next to this negation block right here. I mean, it doesn't, this one is a negation block. So we could see price just form a gap like this, trade into it, go higher, because I'm not really expecting price to just push all the way down. That's a really, really big correction, and I'm not keen to see that, to be honest with you, if you want to see a bullish DXY. We could take out previous week's high, come back down, and then go higher. So that could be the playbook for next week for the dollar index, and try to match this up with your other currency pairs like EU, cable, Australian dollar, because this just has to be ideally an inverse of that, right? So bullish DXY means bearish foreign currencies. I had to like burp really bad just now, so I had to move my mic real quick. But yeah, just try to find an inverse pair and show and see if it lines up with a clean DXY or not. So that is it for the dollar index. Let's move on to gold. All right, so gold right here, we have the monthly on gold. Same thing, recap, swing low, swing high, dealing range right here, as there is no obvious pullback after this pullback, so I took this low, this high. As of now, last week played out really well. I said I wanted to see price come back up, find some form of resistance around this level, or maybe some levels around it, and it just so happened to be an accurate touch on this, barely touched it, on this rejection wick right here. So still bullish on the on gold. You shouldn't be anticipating a bearish move on gold anytime soon. Well, you could expect bearish moves in form of retracement, but not in actual form of a full-blown reversal until at least we take out maybe the structure with displacement. Then I might expect as we come to this right here, then that could be a swing trade you're willing to take right here on like 17,000 pip points basically. So as of now, still not too much on gold on the monthly, but it could be apparent with the way this kind of state has formed that we are going to target maybe this previous month's low deeper into this monthly parallel gap. If it comes to it, then I'll draw it on next week, but for now there's a gap here and there's a gap here, which could be your nearest targets, right? So really strong reaction. Do note that we are just the first week into the month, so following the normal AMD cycle, accumulation, manipulation, distribution, we just passed our first week. So next week we could see some form of manipulation to go higher, right? So that is what we have on the monthly. Dropping down to the weekly, let's repeat that process. So it's always going to be a very repeatable process, right? It's going to be just the same thing on every time frame, just a bit different because price action is a bit different on every time frame, but it's all fractal, right? Whatever that I did on the monthly was just to figure out my dealing range and the PD arrays within that dealing range, like where's my discount and premium, right? I go down to the weekly, it's the exact same process. Where is my dealing range? If you use ICT concepts, that's the first thing you have to determine, because if you can't determine your dealing range, quite frankly, you don't know where you are priced within the current relevant trading range, right? Because all of these are trading ranges, right? But you want to try to focus on the most recent price section as an ICT trader, right? I know when you trade maybe traditional SNR like support resistance, you want to take the largest, more relevant ranges. And sure, I'm not saying that doesn't work, but if you are a person that trades under the ICT banner or at least follows his concepts, you want to try to focus on the newest information. Because think of it like this: if everything else in this era is a battle of information, like whoever gets the information first has the upper hand, why can't we translate that information or that mindset into trading, right? So focusing on the current dealing range allows you to find the relevant premium discount, the relevant PD arrays, and most importantly, it gives you an idea on external to internal to external liquidity. So your bias is all formed within this PD array matrix. It is extremely strong. I highly recommend everyone that trades ICT concept to look deeper into identifying on how this formation comes about, right? The PDA matrix basically. So here we have the weekly on gold. Seeing how last week traded, we took out this weekly high and we had this large push move downwards during NFP as the catalyst, and it seems like we are going to edge ourselves closer to previous month's low. So ever since the past 2 weeks, you can watch the previous outlooks, I've just been eyeing this previous month's low or deeper into this fair value gap at least. So we are probably seeing that happen as of now. We're probably seeing a push move lower into this fair value gap on the weekly as well as the previous month low hidden within it, right? So it's nested within that. So for next week, still expecting a bearish week. We could come up into this weekly right here before coming lower, right? We also have now this bearish order block, right? So you could technically draw fib low to high, and you could see how it kind of lines up with this the midpoint of this CE as well. I didn't even know that. So that's just something to keep an eye on. We could definitely see open, high, low, and close into this monthly low and this fair value gap right here. So let's see if we can refine this rejection block on the daily by dropping down. Let's see if we can find anything. So as of the daily right here, same thing. Where is your dealing range? So we have this swing low, swing high. This is our dealing range because there's no obvious pullback. It's just been kind of sideways this entire move upwards, kind of corrective. So we are coming from on daily at least we're coming from external liquidity to internal liquidity and likely back to external liquidity, right? Even though we may take this previous month's low, it depends on if we displace through it or not, but it also depends on how we close on time frames like the weekly and the monthly as well. So still expecting the price to navigate itself towards this previous month's low, and just right above it we have the previous week's low as well. So expecting price to kind of sink down lower. You can see how with the correct dealing range, price came into discount of the range right here, push up higher, and then into premium into this gap right here, then immediately tanked because I was expecting price to reach this level for a very long time now. So coming down, let me just go back to the weekly and put this on the daily. So expecting a open high low close week. Where could we find some form of resistance to push price lower? Well, first off, we have this really obvious breaker block, right? So low, high, lower low, higher high, bam. So this is what is a break block, and next to it we have an order block. So we could find rejection off of this area of interest, but seeing as how close we are to previous week's low and previous month's low, just barely 2,000 points, we might just do the same thing as DXY. We could just pull back a bit, form a fair value gap, trade off of it to go lower. So pulling up the econ calendar once again. Monday no news, Tuesday no news, Wednesday CPI, Thursday FOMC. This is really big for gold. I recommend you to stay out of FOMC, right? Trading on Thursday. Well, for me this is actually Malaysian time, my bad. I forgot to change it back, but this is 2 p.m. New York time, local time. So I would recommend to stay out of FOMC because it's going to move gold by a lot, and so as DXY and other currency pairs, because it directly correlates with interest rates, which correlates with Forex. So I'm really going to be aware of this. We have PPI as well coming into 8:30 a.m. on a Friday. So yeah, just keep in mind of this. I'm still expecting open, high, low, and close. We could come back up here, or we could just form a gap, trade into it, and come down lower. That could also be the catalyst to push price lower. So looking pretty clean. Last week was a bit iffy because it is NFP week. I mean, it was NFP week. So normally NFP week can get hard to guess the bias, but the second week after NFP usually solves your questions because ideally it has already displaced in one direction. All right. I'm not a big fan of one direction. Yeah, my jokes suck. Anyway, so coming into our final asset class for today, we have the good old S&P 500. If anyone wants to invest in something but doesn't want to trade, just tell them, just put it into the S&P 500, because if the S&P 500 falls, most likely everything else is gonna fall too anyway. So, and it's just been bullish for longest time ever. It hasn't really, I think in the span of like 30 years, it's only been down a few years in the whole span of like 30 years. So anyone that wants to do passive investment, just choose the S&P. You won't go wrong with that choice, at least for another 20, 30, 40 years maybe. Alright, anyway, so here we have the S&P 500. We have the monthly, right? We have swing low, swing high, dealing range right here. This is our current all-time highs, and this is the current monthly ERL, because there is no pullback after this range right here. There has been no pullback. So seeing as we have displaced above, we felt displaced above previous month's high right here, taking out that previous all-time highs. I am still not bearish on the S&P 500. There's no reason for me to be bearish. Same thing as gold. They have both just been skyrocketing. There should be no indication for you to say, hey, I'm bearish on these asset classes. So just because we wicked previous all-time highs, we are still bullish. We have wicked it, yes, but that doesn't mean that we're going to see a straight on reversal, right? Unless we see some weekly, daily shift in structure, maybe we could say, oh yeah, maybe it could come into that pullback phase, because on a monthly, there's nothing to expect a bearish market as of now. So monthly candle hasn't closed, so we can't really determine that. We could just keep going higher, making new all-time highs in this monthly candlestick. So let's kind of look at the weekly for a bit more context. And same thing, where is our dealing range, right? Swing low, swing high, dealing range right here. What is within this dealing range? We have this fair value gap, we have previous month's low, we have this gap that we filled as well. But what is structure telling us, right? We're taking out highs, making new all-time highs, right? Every time we wick an all-time high, we see a slight pullback into discount or into some PD array. Ideally within discount, so we can hold the trades longer and be in line for a longer period. But here you can see how we wicked it, came back down, and then pushed up higher. So here we wicked it as well. We failed to close above the previous all-time highs, and last week forecast was pretty good. It came down into this longest wick and then pushed up higher, which is what I was expecting. So for this week at least, we do have this rejection block right here. Put that, so that could be where you could find support to go higher. It's not as clean as this right here, but it is nonetheless still a noticeable long wick. And also with this long wick, we have now a swing low. So ideally this should not be broken if we're to be really bullish for now. So on the weekly, at least, closest level of support you can anticipate is either this rejection block or this series of this series of down close candles, which is an order block right here, which is displaced over by this this bullish candle, leaving a liquidity void, which makes this an order block. So we could see price to open low, high, close into current all-time highs. Until I'm proven wrong by seeing displacement lower, I'm still bullish on the market, right? Of course, it could come down and show that I'm wrong by displacing through all these levels right here, sure, but I can't predict those things, right? I'm not a god. No one can always accurately say that they can predict the market. I'm just saying that likelihood is we are not going to see that as of now, right? So dropping on the daily, right? Just clear that. Same thing. Why has my range moved? All right, fix that. So here we have our dealing range, swing low, swing high. There has been no obvious pullbacks since this large impulse move, right? I mean, you could probably say this is that current swing low, right? But I want to see more of a pullback before I form a new dealing range here. But if you pull back and give a bit more price action around here, then this will be my new dealing range, right? So as of now, still bullish on the markets. We could see price come lower into this swing low. Oh no, I mean potentially a swing low right here. Also into this RB right here, this rejection block to go higher, right? But if we were to trade through this level, the next big thing is this volume imbalance right here. Still bullish on this market. I don't see any need to be bearish right here. But if we were to see resistance on top, we could see open, high, low, and close into this RB right here. We currently also have this high, low, and higher high. So this is that breaker block right here that we could trade into. So this entire area is filled with PD arrays that I chose not to draw out because it would be extremely messy. It would look like this. But just keep in mind that this is a high area of interest that you could see price bounce off to go higher from. It depends where we trade first into the week. If we trade lower, then and I'm expecting a move higher for the remainder of the week. But if you were to trade higher and then lower, we will need really strong news or catalysts to push price higher into current all-time highs, right? And we do have that next week. We have CPI, we have FOMC. So whichever plays out first, whichever Monday and Tuesday trades to first, that is likely going to shed some light on how the week is going to play out. So still bullish on all time frames, right? So I don't think there's anything else I need to cover. Let me see. Nope, that's pretty much it. So yeah, thank you guys for watching. I'll see you guys in the next one, right? I've been recording for 28 minutes. Hell yeah. Take care.